everybody, this is Henry. It is 8:05 p.m. Good evening. In about 25 minutes, we're going to get the Australia employment changes, and it is expected to be out at 8:30, and the forecast number is negative 9.7k with the previous release of negative 21.1k. So we're going to be looking for a minimum of 23k of deviation. So I run it off a nice round number of positive 15k. We will be looking to buy the Australian dollar pair, and if we get a negative 33k, we might sell the Aussie dollar pair. We all know that during Monday's RBA interest rate decision, RBA surprised the market by hiking interest rate by 0.25%. Now, because of that action, Aussie has been very well supported, and we saw when the Australian dollar traded to the 88 cents handle, we saw immediate support to push the Aussie up. As a matter of fact, ever since the rate decision, Aussie went from 87.60 area to 88, 8900, and we haven't seen this pair dropping down. So today, if we do get a positive reading, we could probably see the 90 cents gets taken out, because there's really no negative sentiment. There shouldn't be any seller of this pair, given the fact that RBA not only raised the interest rate, the economy of Australia is basically out of recession. And if we also get the employment number going in the positive, then there's really nothing negative about the outlook of Australia's economy. So really shouldn't see any sell in the Australian dollar if in fact we get somewhere around the positive 10-15k of release. And I really do think we will probably see the 90 gets taken out. We probably will see 91-92 cents in the next couple of days if Australian dollar were to keep this positive trend. Let's just look at the chart a little bit, and let's get some idea. As we can see on the strength meter, Aussie is going strong at 7.3, and if we look at the 15-minute chart, we can see that the Aussie started the day at 89.10. It went about 25 pips up, and right now is pretty much at the top of the range. Yesterday it went as high as about 89.50. Seems to be the 50 was some kind of a psychological resistance. But I think if we do get a favorable release for the employment number, and the unemployment were to be kept around 5.8 or even at 6.0, I think the Aussie could definitely break the 90 cents handle. And let's look at the monthly chart. The highest on record before the capitulation that took place back in 2008, the Aussie went as high as 98.57 against the dollar. As we can see, it's almost at parity, and we're about 1,000 pips away from parity again. So given the outlook of the Australian economy, I do think we're really getting nothing but optimism for this currency pair. So with that in mind, we will approach this one with caution, and hopefully if the number is good, we'll start buying, and hopefully we'll ride it up all the way. If the number is not good, then we'll wait for to see how the market reacts, because I really don't want to be selling. As I try to explain, there's really not much of selling going on with the Australian dollar, especially from the fundamental point of view. We could wait for the pair to hit 86.50 and then maybe sell from there, if in fact we got a little bit better than expected but not positive employment number. So we just have to wait and see how the market reacts. So now, coming up about 20 minutes, we'll trade this number live together. I'll be back as the news is getting released. Thank you. Okay, coming on in less than 2 minutes now for the news release. So stand by. Let's just be ready, just in case we get a earlier than expected release.
And in a little over a minute, we'll be getting the Australian employment figures for September. The September employment change expected at minus 10K. That would compare with the prior figure minus 27.1K. The unemployment rate expected at 6%. That would compare with the prior 5.8%. And the participation rate expected at 65.1%, which would be in line with the prior.
Australian dollar trading just below 89.30, did hit 89.50 intraday high earlier today. That is also 2009 high.
And in under 30 seconds, we'll be getting the Australian September employment figures. We'll be leading off of the employment change expected at minus 10K. That would compare with the prior figure of minus 27.1K.
Yeah, obviously we have to pay attention to the unemployment rate. If it's at 6% or less, it would be good for the Aussie dollar. If we get a conflict with the unemployment rate and the employment changes, then we're going to take a minute and see how the market reacts first. So don't do anything hasty, just wait for the number to come out and then we'll take our time.
Plus 40.6K, much better than expected, unexpectedly rising, Australian dollar spiking above 89.60, 89.74 last.
Okay.
Up more than 3/4 of a
Alright,
percent.
it is
Also,
very good.
It
is very good.
Unemployment rate coming in at 5.7%, better than expectations.
We're gonna wait for a retracement and we're gonna jump in on a buy.
35.4K above the prior decline of 30.8K.
Alright, we have a positive 40 and that's just across the board better than expected. So we're gonna wait for a retracement, then hopefully we'll jump in on a trade. Alright, so stand by. Right now, the initial jump, if the market goes back down to like maybe the 89.70s or so.
Change revision minus 26.2K versus minus 21.1K.
Okay, we have a little bit of negative revision on the prior month. So let's wait for a retracement. Hopefully we'll get it to come down to maybe the 89.50. If we get a 89.50 or so, we'll jump in. I think we're gonna see 90 cents getting taken out. So let's just wait a little bit for this thing to come down. 89.50 will be a good entry, and then let's see if we can wait and see this thing break the 90 cents. So stand by. Okay, we're not getting a retracement. We saw this thing went down to the 80s and then it bounces back. Let's see if it comes down again. Like I said before the news, there aren't much of sellers here for the Australian dollar. I think having a positive employment number and the rate hike is going to make this pair a strong and steady pair to move forward. So, I think ahead of the 90, we're going to see some kind of a resistance. But I expect the 90 to be taken out. We're going to see some resistance pushing it back down a little bit. And eventually the 90 should be taken out. Let's be patient. It's only 2 minutes after the release. So there are going to be some profit takings. Immediately we saw about 45-50 pips of jump. I'm sure there are going to be some profit takers now. And to drive this pair reverse. On that reversal, let's see if we can getting out a much better price than what it is right now. Okay, so we saw the 82, 85 area. Really like to see it down to the 50 if possible. Now if it is not possible, then I think about the 70. If it goes down to the 70s, that would be good. 70, 60, it would be good. Yeah. So stand by. I mean, if we jump in right now, we risk for this thing to come down all the way to the 50. And even though it's looking good, it looks that you might want to do that upward break. But I'd rather be a little bit more careful than to be jumping at this moment right now. So I'm going to give it a few more minutes. And then hopefully on a good retracement, we'll jump in. If we don't get a retracement, you know what, let's miss the trade. So stand by now. We're not going to do anything yet, but have your station open, and hopefully we'll wait for a little bit better retracement than this, because really not getting what we want. I'm not really seeing the market giving us a good entry here. Okay, so let's stand by. Let's not rush into this. I'd rather miss it than to jump in at the top, especially we're coming very close to that 90 cents, and we're jumping now. We're 13 pips away from that 90 cents, 17 pips away from there, and even though I think it's going to break it, but I'd rather be in at a better entry than where we are right now, and having to sit through hours waiting for it to be taken out. So I'd rather wait a little bit. Okay, we see that 90 cents gets taken out. So I don't know, guys. I feel very uneasy jumping in on this trade, knowing that the 90 cents is probably going to be a very strong barrier, and now we just broke it by about 10-12 pips. So I'm gonna wait. As I said, it's only been 9 minutes after the release. I'm gonna wait for some kind of a retracement. It could be back down now to the 90s, to the 90 cents, or even to the 89.90s before I actually going to jump in. Now that we just made a new high, so I'm gonna wait a little bit now. Going to be looking at maybe the 89.85 area for a possible retracement before I jump in on a trade. Definitely going to wait for below or around 90 for an entry. This currency moved. I'll give you an idea. The pre-release was at 89.32. We already saw about 80 pips of upward movements. So with a decent enough retracement, that's 89.72. So that's 50% retracement at 72. So if we don't get 50%, let's say we get only 30%, that's still going to give us 89.80. So that's where I'm waiting for this currency to go down to. And once it goes down to the first retracement, we'll jump in, and hopefully we'll see the market continue pushing this currency up. Maybe even to the 91 cents today. Like I said, 92 is where I think it will be the resistance. And we don't really have much of a resistance now going upward with this currency. So once the 90 is being taken out, which it is taking out right now. So stand by. If we miss it, we miss it. It's fine. The idea is to be careful with our trades. Because one or the other could take place once it hits the 90. It could bounce back from the 90. Remember, it already moved 80 pips. And we were expecting the market to move maybe 50 pips after the news. Even though it is very, very positive, I still would expect the market to cap off maybe around 50-60 pips. So now we're seeing 80, almost. It's going to be 100 pips in about 17 more pips. So the market has already moved pretty exaggerated, especially for this currency pair. So I definitely gonna wait for a retracement before I jump in, especially it has moved so much. So once again, let's stand by. Okay, I'd rather be careful than to be careless. Okay, we're gonna wait for the Audi to go down to the 80, 89, 85 area, and that's where we will make our entry. Hopefully we'll get that, and we'll go long on this pair. Right now we're seeing a little bit of support here. Let's see if it will continue to go down. Remember, we're not going to jump in as long as this is still dropping. Okay, we're gonna wait till the drop is over before we jump in. So as long as it is still dropping, we'll stay out, and once it makes that stand, that's when we'll get in. Alright, I'm gonna go in right now. I got in at 02. Hopefully you can get in if you want to follow me. We wanted to get in at 85, but if we don't get 85, we can get whatever we can get. That will be for the best. Alright guys, we're seeing about 6 pips. I just told the room to close the tray, and they closed the tray right around the 90-10, 90-12. So they may close to 10 pips, 10-12 pips. Now I'm seeing about 5 pips. I'm going to go ahead and close it. 4 pips right now. It's a positive tray. However, we're seeing some resistance at the 90-15 area, and I just don't want to hold on to this trade for too long. We are positive for a little bit. Might as well just take it, especially we're at the top. If the market comes down to the 89.80, 89.70, 89.50, then that will be more attractive for me to get back in on a longer term outlook for this trade. But right now, we waited for the market to break the 90 handle. It went up to 90.15. We waited for it to come down to the below 90, and we got in. And we had as much as about 15 pips of profit. I didn't take it, but it still is a positive trade, and there is a potential for this trade to keep on going. And for the purpose of this recording, once again, I'm going to close this trade and work on the editing of the video. But in the meantime, it goes to show you, have a little patience. It pays off. I mean, before the market actually break the 90 cents, nobody really knows if it's going to bounce back from the 90. I mean, it is a strong psychological level. Just before the actual release, we heard that there are option barriers set at the 90, and there's just a lot of uncertainty at the 90. So not jumping in a trade immediately, I think it's justified. I mean, we're gonna come out with a lot of trades like this, especially if the market has been trading around the top of the range or the bottom of the range. We really have to use common sense in our trading. Could we have gotten in at the 89.80, 89.90 area and maybe pick up more pips? Yes, absolutely. But at the same time, we're also risking a bounce back from the 90, and and then we'll just miss out on the trade. Not only miss out on the trade, we'll lose money. Whereas if we didn't get in at the 90, the worst can happen is miss out on a trade. So basically, we have two choices. On the one hand, we risk of not making anything. On the other hand, we risk of losing a trade. So I chose the first one of I'd rather miss a trade than to lose money. So we waited for the market to break the 90, and at that point it became clear to me that the 90 cents has already been broken. So it makes sense now to go long. So that's the whole decision why I waited. And plus the fact that you have to remember, the market was at 89.30 prior to the release, and after the release it jumped up about 80 pips, and we expect the market to move 40 to 50 pips after the release. But after an 80 pips of movement, there's gotta be some kind of limit to this movement. No matter how optimistic the market is, there's gotta be some kind of limit. So I'd rather be a little bit more cautious, especially after I see this kind of movement and not getting a proper retracement. So there you have it. Right now market is retesting the high, which is always the case after I got out of the trade, but not a problem. Just to show you patience. We wait for the trade to go, we wait for the trade to come down, we wait for a decent retracement, then we get back in. Okay, thank you very much. Bye bye.